Okay, hello YouTube. Mm, I'm trying to respond to the guy that said I should explain more on this video. My previous video was cut out, technical issues. My apologies though. So let's just get into this main one. You understand? I think, yeah, this is a trade I took on NZD. So let me go to my chart because in my last video I was talking about how using the right chart is very important and is very crucial. I think that's S&P. I think it bounced at that zone, and voila. I'm not a fan of retracements, so I didn't take the trade. You understand? I don't like taking retracements. I just like just waiting for the retracement. After retracement has been completed, then I take the trade. So I've already marked out my charts for the upcoming week, and look at that. Let me draw my volume profile. My volume profile from last week, from this high to this low, and look at that point of control there, exactly from my last video. That point of control exactly from my last video. This is it. This is that particular point of control. It just came down and just rejected sharply. You understand? It just came down and rejected sharply. So you can compare it with my previous video, and it just shot up. It just went up. So I'm just going to wait, calmly wait. I'll see a retracement either on Tuesday or on Wednesday. You understand? But I know that by Thursday, Friday, the price is going to come around this region, and then I can have a good entry, or maybe even this zone. You understand? But I'm looking at this point of control. It's very, very crucial. And so let me just dive into this thing, the order flow something, because I wanted to help out that guy with that order flow. The platform I use is ExoCharts. I don't know. This thing has not loaded up. Okay, it has loaded up here. I use different footprints though. This is a cluster chart now. You understand? This is a cluster chart on Solana. This is a cluster chart on Solana. I just designed this cluster chart recently because this one is easier on the eyes to read. You understand? Some people don't know how to just read based off of volume and delta. You understand? But this cluster chart now is not just showing the volume. It has the total sum of delta. So I know that okay, yes, there's selling here and there's buying this side. Yes, and everything is a lot more cleaner and easy to read. You understand? But for me, I prefer using this type of charts. I prefer using the other chart I used in the first video. Understand? But I'm still kind of in between. I'm still looking for what works best because this other one shows both volume, yeah, and this one has both the open interest, yes, and my footprint bars. So it's very good if you can have the two charts, because now I have the two charts on, so I just kind of combine them and they show the same thing although in different ways. But me, I just like to just look at the colors and see, okay, yeah, there is no volume here, there's high volume here. Like here now, this price that is at, this is 245, this 940. I don't know if you can see. Let me zoom it. I hope this thing gets clear. This 900 minus 941k is the volume traded here. This is the delta volume. You understand? This is not the delta, this is not the actual buying and selling, but the volume, the implied volume here. Yes, and that is minus 941k. You see it here. Yes, and it's on a zone here. Look at this place around here. This place is around an imbalance area. You understand? So if I on my imbalance tool, you will see the imbalance. Look at it. Just tapped it. Just tapped into it. You understand? Most times it's not accurate to the per tick. You understand? But you should like use your intuition to know that okay, yes, where is price going? You understand? If I look at this on a regular chart now, you might see that it's bouncing off a moving average or something. But eventually, price might go up and still come down to still clear this imbalance because it just tapped into it. You understand? It just tapped into it. Maybe it's going here now to grab some sell orders. So we'll look at it because I first what I normally do is I use my normal regular trading view charts to do the analysis, then look at the zones. You understand? Now this place now that we're seeing this 941k here now on this other chart type, let me look for it. This is it. You understand? This is that particular distance. This is it. Let me see if I can. Okay, let me see if I can toggle this thing on. Let me see if I can toggle that imbalance on. Yes, look at that particular imbalance. It just tapped into it. Yes, and this one now shows both the delta and the volume. This one shows both the trading delta, the difference between the buy and sell, and then the volume itself. You understand? This is a proper cluster chart, I would say. You understand? But that one is more custom. I just customed it because most times I don't really need to look at the delta. You understand? I don't really need to look at the delta. If I just look at the volume, since the volume is the fuel, I just look at say, okay, yes, this is that. I now know what I want to do. But this is that same chart. See how price just starts into that imbalance and goes up. But it's going up here. It's not. It might not even be the true trend. It might not be the true trend. It might be a retracement. Why I'm saying it might be because I've not looked at the Solana charts recently. So let me go over to trading view and look at the Solana charts. Let me go to trading view. Let me look at Solana. So USD dot P. The perpetual contract is just like the futures charts. The perpetual is similar to futures for Bitcoin, crypto, but for currencies and commodities, you need to go to the futures charts. That's where the real trading is happening. Anything that is not there is just a mirror. Anything that is not there is just a mirror. I'm using Bybit, so let's look at Bybit. Let's look at Bybit. Okay, this is 4 hour. Okay, let me look at it on the 1 hour. Yeah, so it's way high. So possibly there's going to be a retracement. Look at that. Look at that. You see? So it's likely going to be a minor retracement before up because there's still balance here. This was that zone 241. Let me zoom in my charts so we can get it. I'm trying to make it big. Look at it. It's at 245. And this is that 241, 242. So price would most likely come down to this area. And once it gets into this zone now, maybe by then this moving average might would have met up. This moving average, mind you, is a 200 moving average. It will now meet up with it and then maybe take it higher. But from the 4 hour context, I won't even take this kind of trade. Why? Look, it's way high. So there's a plausible cause for retracement. If I should take trades now on this on this Solana, I will take it around the regions of here. So there's going to be a heavy retracement afterwards. But for now, yes, the price is trending up. For me, that trades the 4 hour time frame. But if you are trading the 1 hour and you're doing your entry 15 minutes, all those kind of things, it's fine. If you are trading basically off of the 1 hour, because me, I trade 4 hours and I do my entries on the 1 hour just to refine it so I get good prices. Yes, and it has been trending. So if it should go up to this 283 point something volume, it has to come down to this place at least. You understand? It has to come down to this place at least. Let me draw my volume profile. from low to high, from low to high, high to low. Look at it. From this now, look at it. This is the range. This is the range of traded volume. Look at the point of interest, the POI. So price might just come here up, then come down. You understand? Price might come down because now basically self with just if you're looking at pure candles, you might get confused. Even though this is a Hakinashi. You understand? So I would rather let the price play out on its own. Once price comes around this zone, I'm saying some price will come around this zone because it's just like a rally, a major rally has happened, so it has to cool down. Once it cools down, and then volume has been built up here. There's a lot of built up volume here. Then price. So if I'm going to take this trade, I'm going to looking at to take this trade around 236 region. Now if yeah, let's look at it. 236, yes, 236 on the dot. 236 on the dot. Let me look at 236 on the dot on that order flow tool. 236. This is 236. This is 236 on the dot. And see the point of interest. This is the POI on the order flow chart. And you see the order. These I just marked it out so it will be easy on the eye. I use this color coding so it will be easy on the eye. So if I should mark it out here, I know that I'll be waiting for price. Any entry I'm going to do, I'll be waiting for price to come down to that 235, 236 zone. So this one is just doing is likely up and then it's going to clear. Now if I on this imbalance too, you will see that yeah, there's a lot of imbalance. They have like two imbalances before this zone. So this tap is just a test of the imbalance. So the price is going to smash through that. You understand? Price is going to smash through that because now it's going to be making a retracement on the 4 hour. You understand? Once it makes that retracement, then it might now probably go up. So if I'm watching any level, I'll just be paying attention to this place, how price will later react here. You understand? If I come now see a point of interest around this place now, you can just easily just take the trade and you just snipe the trade. With this, you snipe the trade because these are just the wick of the candle. How many ticks? How many points is it before this low? Unless price eventually invalidates this place and just smash down. But if price comes here and now buying volume comes up, you just do the entry. You just do the entry because you see it play in your front. You see that price will kind of slow down. Price will kind of slow down. And then you just see the change. You see the change. Because I made this to be graphically easy. Yes, and this is the cluster chart. But on my main chart that I used to trade, I think our level we are looking at is 236. 236. Let's look at 236. This is 2. Okay, yes, this is 237. This is 236. Look at the volume here. Look at it here. So this is that swing. This is the swing now of which we are seeing this 14,000 volume here. This that 236. That's why I'm confident that okay, yes, for me to take any trades, if I want to even go long, price has to at least come here. If price comes here and then it reacts now, it doesn't break the 200 EMA. I know that okay, yes, the trend is still up. You understand? The trend is still up. I might enter at 237 or 238, and there you have a very you have quality good field. You have like good order, and you can just keep your stop loss just right below this low, meaning you can use bigger leverage if you are trading it from an exchange, or you can use a bigger lot size if you are trading it from a brokerage. You understand? So either a crypto exchange or a brokerage, you can trade this. So I'm not even going to take any trade here. I don't even advise anybody to take trades here. Unless you're scalping. Unless you're scalping, of course. If you're scalping a hair, you can just find a way to like scalp hair, you understand? Because now you're just seeing the order flow. But for me to get a good risk to reward, let's say I want to take a buy position here at 236, around 236, and then I just put it below here, because now I know that okay, yes, there is no reason for price to come whatsoever here. Price is going to likely bounce here, and I just take my TP up here. This is a 1 to 6 risk to reward. It gives you excellent risk to reward, like it's mind blowing. You understand? But for me, I don't always like to use tight stops like this. I'll be honest, I don't like to use tight stops, so that's why I go to the 4 hours. If I'm trading from the 4 hours, I'll use a wider stop and a wider take profit, but with a smaller lot size, so I can accommodate my trading. You understand? But from the indication of this, Solana has just been pumping, so a retracement is due. Look at the news. The news just came in. Solana bulls complete bullish breakout. I 360 mid-term target. But before it gets to that 360, it has to make this retracement now. And if you look at it on the 4 hour, there's still more incoming retracements. I always like to look at the bigger picture, and I always advise any person trading to always look at the bigger picture. If you look at the bigger picture, you see where price is. It made a huge breakout. So I will always wait maybe for price to come around this 218, 220 zones. You understand? Before I now go and look for it in that 1 hour. I normally trade, like if I was entering here, imagine the kind of tight stop I will use, and then I'll just keep an open TP, and I'll just let it ride. That means I can just risk, instead of maybe on my account, if I have maybe a $1,000 account, instead of me to just risk $100, I can just maybe risk 20 and still get good results. You understand? Because I'll just be trailing. I might not even trade the stop loss. If I'll just leave an open TP and just keep my trades at break even. And somebody will look at your trade and be like, "Wow, why do you have such high risk to reward?" But they don't know that most of all these professionals, they're using order flow. Using order flow will just change your trading. Like your loss is going to be very, 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 very small and tight, because now you are seeing the numbers. You calculating the numbers in real time. You're calculating the numbers in real time. For me, that trades 4 hours is not even a trade that I would take. But if I wanted to say, okay, let me just take the trade on this 1 hour, because there's a potential of a high being attained, then that's what I will just do. The analysis I give now is what I will just do. The analysis I give is just what I will do. And this indicator, I'll say again, is a Luxago indicator. You understand? It just shows perceived volume, accumulated volume. And this place now, the volume here is low. You can see from the volume profile, and the indicator is printing 14. So after some time, it might just come down here. If it should go up, it will come down here. By the time it catches up with this moving average, it will come down here and just make a bounce, just like something like this. You understand? But this was from the 4 hour. This move was from the 4 hour. It should just make a bounce. Once it makes a bounce, and I find support here, because this now is a support level. If it just comes here and makes another support now, and it bounces and moves up, and one candle just close or two candles just close, you can just take the trade. Understand? But even with the order flow tool, before the candle even makes the close, you're already seeing the numbers. Because like here now, look at this level now that we're looking at, this 1 hour that we're looking at. Look at the delta here, 431. Look at it. So like it's giving you the real distance. Look at the delta again, 431. So it's giving you the correct info. You understand? It's giving you the correct info, but it's displayed differently. Some people like this ladder, like DAX now. DAX, DAX. This is one DAX. He uses this kind of cluster chart. You understand? He uses this kind of cluster chart. So look at it, minus 431k. Look at it here. It's the same thing here. This is the total delta 431k. But I like this because here now this one shows me the open interest. I know that there was a lot of selling here. These sellers versus buyers. There was a lot of selling here before buying started coming in. So if they were selling here and buying started coming in this area, buyers will still later come here to again buy. You understand? Buyers will still come in here to later buy. So I just have to just watch for this level. If this level holds on the next candle, definitely I will trade it if I was trading it. So I'll just wait, let it just destroy this imbalance here. These are stacked imbalances. You understand? It just marks it out. So I'll just wait for it. But most times I don't keep these lines on my chart because I already have like on like I have a perception already of, okay, yes, these gaps price will come and fill them. These gaps, these offshoots, price will come and fill them, because price doesn't just go in a straight line. It goes in a zigzag manner. It's trying to fill those imbalances. So most times I turn it off, have my charts looking clean, so that if I just set a line, I know that, okay, yes, this line now I've set it, set the line here. And then once I set it, why is this my line not printing? Do I still have network? Okay. When I set my horizontal rays, and then maybe on trading view, especially on trading view, I set price alerts on this ray. So once it comes around this zone, it will just alert me. I don't need to be looking at the chart. It will alert me, and then I'll just, look at what is going on from here. From here, if I've seen that it has pushed up, goes to this level, and this level is holding, and this level is holding, I'll just how many points? Just few points below here. I'll just set my stop loss around here if I want it very tight. You understand? Or I can just set it here to just give it enough room so that, okay, yes, if it's coming back down. But most of the times it just comes and reacts with the point of interest and then just moves up. So that is just that. That is just for now. This is just a lot. This is a lot is going on here. A lot is going on here. These are value areas. So probably price has to definitely go down because all these places are value areas that people have made selling. If you look at here, you see the selling. Buying is not much here. Selling is much here. Selling is much here. There's not much buying. There's selling here. There's buying, but price is not moving. So you know that around here, all this buying here now, there's much buying here, but price is not moving. There's absorption here. Somebody's absorbing all these orders. There are orders here that have been put, that have been absorbing this order, and these are the counter move orders that you have to watch out for. Yes, and there's a lot of buying now, but price is not going anywhere. So there's absorption. Yeah, somebody's just absorbing all those buys with sales. Somebody's taking the opposite side, and then once sellers now gain control, you see the sell volume and price actually made a move. Sell volume, price made a move. So that's why I like the open interest form here. Yes, and then I also look at the footprints statistics here, the total footprints, if it's a positive footprint or if it's a negative footprint as per the level. In regards to the level, I don't look at them just individual. I look at it at each candle. This level, if I'm interested in this level, I look at the delta. You understand? So that's just that. And but for beginners, for a beginner, I think I advise you should use this kind of charts. If you set your chart layout like this, it's going to be easy to understand, because at every point in time you just see the sum of everything going on here. You understand? And maybe with time I'll make a tutorial video on how to set up this kind of charts. And the platform is Ezo Charts. It's quite expensive. It's not cheap. It doesn't come cheap. It's expensive. You pay a monthly fee to get connected to the data feed. You understand? Although what I'm using to make this example now is a free version, so it gives me just like a snapshot. You understand? In real time, this will be moving, this price will be moving. You see the price being traded in real time, and you see the values change in real time. But I just wait. If I'm looking at the level, I just wait, let the candle close so that I see the information as I should. Look at all this here. This whole thing here shows you absorption. This here is just absorption. You understand? There are a lot of sellers here that you are not even seeing. You understand? So this is not a good zone to even buy from. You understand? And if you look at it on your regular charts, you'll just be seeing that okay, yes, it's just kind of range, it's very, very range. And this applies across the market. Just how you look at the data and access to information. So my advice, leave your guru. Your guru don't know what he's doing or she is doing. They are just there to just trade and do the lifestyle. For me, I've chosen trading and there's a lot of money to be made here. You understand? I watch a lot of pairs. There's a lot of money to be made here. And most times I backtest people's strategy, and even if I follow people's signal, like DAX, the NZD trade I did, I followed DAX signal. So I'm still watching it. I'm typing DAX. Okay, let me type the NZD. NZD